Welcome, everybody. Thank you again for being here and making the post-lunch return. Hopefully not too much napping in the audience for this one. I think it'll be a good one. But so over the last 30, 40 years, there have been these two models, venture capital and private equity. And they've been closely related to each other, cousins, if you will, but very different. Venture capital, early stage investing, minority investments in companies, primarily technology focused, avoid owning real assets, avoid getting your hands dirty, actually owning end businesses, doing things in the real world. And then private equity, which is more control focused, majority investing, generally more comfortable owning real businesses, if you will. And that's been the state of the world, the business for the last couple decades. But with vertical software, you're starting to see those two worlds collide, where technology companies are exploring ways to own and better operate the end businesses and the verticals in which they operate, and more traditional private equity-backed companies are getting smarter about how they use technology. And so we brought two great founders here, CEOs, who are working on businesses at the different ends of the spectrum of this emerging model. So with that, I'll turn it over to them to give their backgrounds. So I'll start with Kamal from Moxie.
Yeah, I'm Kamal Massey from Moxie. I'm CEO of Moxie. I'm a traditional operator, so I've been an operator across many different industries in my career, legal services most recently, and then now in aesthetics. Moxie is literally the sexiest business that I have been a part of. It is in the aesthetic industry, which I didn't think I would ever be in before. At Moxie, we are building the easiest to use all-in-one platform for operating a med spa. So if you are unfamiliar with a med spa, you likely know someone who frequents them. Think of a salon-style clinic at the intersection of healthcare and self-care, offering aesthetic services. And so Botox, fillers, and laser hair removal, things like that. And so we offer business-in-a-box solutions to help aesthetic entrepreneurs launch their own med spa. We offer software for day-to-day practice management, and then a slew of ancillary services to help them run their med spa more profitably, grow faster, and operate compliantly. And so we view ourselves as much more than vertical SaaS. There's really no extent of what we won't build in service of supporting the med spas that are our customers today. And so right now we have over 500 providers across the nation that we support, and growing rapidly. We launch between 30 and 40 med spas a month.
Awesome, thank you.
Great.
Yep.
Thanks, everyone. My name is Matt Price. I've been in customer care business for a long time. I think I was in the first 50 employees at Zendesk, and saw that from Series A through to private equity. So saw a number of things that, within that era, but mostly around actually how difficult it was for companies, especially in the mid-market, to operate and run their customer care. The complexity was increasing for them, but the level that they were allowed to invest or could invest within that, and the capabilities of doing it, really meant things stayed very static within that business. So myself, along with a couple of other co-founders, decided to create the world's first AI-native contact center, targeted specifically at mid-market businesses. We found out through our investment rounds that it was probably a third to $500 billion business opportunity based around what people are spending today within that sector on labor. So essentially what the service we offer is, we have a deep Silicon Valley AI tech team that are developing agents who are on voice, email, chat, also full analysis of all the conversations going on. But when the AI runs out of gas, it can transfer to what we call our superhumans, who are the top tier of customer service agents who are then trained to work with the AI. And we charge according to outcomes, so per successful resolution. So if there's any DSAT of either from our customers' products or from ours, then the customer doesn't pay. So that was the foundation of the business. And now we've we've grown quite quickly, assisted by something I'll talk about in a sec. But and so we've done 500 deployments now, and we've learned quite a lot about what it takes then to run a next generation kind of customer service unit within the AI world. Our business model actually was, we call this flywheel. And the first thing we did was actually develop the deep tech, and we were about 10 people there. I was fortunate that we found a co-founder who developed this software called Genesis Cloud and then spent a year actually developing the AI, so we got the scalability and the really good AI chops. And then when we were ready, we said, okay, we're missing one part of this, which is the people. So we were a 10-person company. We then bought a 3,500-person contact center business. And it was helpful for a couple of perspectives. The first one was that it gave us immediate scale, and it gave us enterprise-class kind of product that we could deliver immediately. The second thing was there was a book of business there of existing clients who were ready for upgrading to this new type of AI integrated service. So very quickly, these customers became our first customers of the new technology or the new offering. And then that then helped us get reference clients to acquire new organic-based customers, of which we develop, and we'll continue to acquire BPOs and new organic businesses as we move forward. So that's where we're at. There's a lot of stories underneath that we could tell at some point.
I think the thing that's interesting is that it's a sandwich in a way. You both have made very large and proprietary investments in technology that are specific to the verticals that you're serving, and then you're at scale in the real world. You have 500 plus locations, 30 plus opening a month. You have 3,000 plus people sitting in a seat, working for the business. But you've taken very different paths to get there. Moxie, I think, is a little bit more of a incubation or co-creation, franchising, if you will, of these businesses. I don't know how you describe it. Whereas in Matt's case, they found a single company, an asset that they wanted to acquire and partnered very deeply with that one. So maybe if you guys could talk about what it was about the structure of the market or the types of businesses or the dynamics of the market that you're serving that led to the one approach versus the other.
Yeah. The story of Moxie is actually solving a deep set of problems for a very niche subset of a market. And so we really started looking at people who wanted to get into the nurses specifically who wanted to get into the aesthetic industry and had no idea how to run, operate, or start a business. And that kind of really super niche of the market was not being served at all. There was no one doing that. And so we created structure around that. We helped them form their entity. We helped them find medical director oversight. We kind of give them the fundamentals of how to manage the P&L and then the software for day-to-day practice management. And we did that over and over again until we got quite good at that and known within that subset of the market. And what we found is over time, the earliest customers that have been with us, 2-3 years, started to grow and move us up market. And they started to experience a different host of problems and pain points that because we were so embedded with them, we kind of understood and were able to work with them through those to develop and influence our next set of features, right? And so we then moved on to experienced injectors who were working in an existing med spa, wanted to leave, bring kind of their book of customers or patients with them and start their own, right? And so that is a slightly more advanced subset of that market that we were then ready to serve. And once we could effectively serve them, we moved on to large operating med spas who are already in the market kind of running, and they all have, each of these profiles has slightly varying but overlapping pain points and different sets of features that they might need or come to Moxie for. And so we've really been seeing kind of these phases of growth that really started on what is the pain point of this segment and can we solve this very, very well. And I think the unique nature of the industry is just the community base and how much RNs kind of communicate with each other. And so we found by being effective at solving the pain point of these kind of subsets, they would in turn refer more and more of new subsets. right? And so right now we kind of convert our referrals at 2x the rate that we would any other kind of lead coming in. And it's a consistent growing kind of lead generation for the platform that creates this virtuous cycle as the network grows. And so that is really how we started and what we continue to do today.
Makes sense. Awesome.
Yeah, similar to you, really. When we looked at what the pain point was, and this was born out of one of my co-founders was in the BPO business, and I was obviously coming from the SaaS business technology, is that, especially for this mid-market business, but also all types of businesses, what tend to do is they would deploy the technology, and then 5 years later, they'd done nothing else with it because they couldn't. And it was fragile, and they connected it to a bunch of other things, and they would have an incumbent BPO, but to actually ramp and retrain and restructure that, it was very expensive for them. And what we would find, even when we deployed a new technology, from a technology perspective, it would be probably at least 12 months before we could get it to market, because we had to have to package it and everything, and then getting adoption was really low. So we wanted to try and figure out how to do this, make it super flexible. So a number of our clients have big spikes in demand, and how do we flatten that out such that they're not having to think 3 months in advance of the Christmas season or Thanksgiving to hire up and hire down, and really do this as like you say, I guess you call it a business in a box here as well. What we learned, though, was pretty incredible by merging the two operations. So if you imagine, I've got a bunch of AI engineers with brains the size of the planet, and who are just incredible engineers. And also, with the services unit, have a team that are just incredible operators. I mean, really know how to get stuff done, which I'd never seen in a software business before. And so we've got this fusion of something which I think is creating something quite special. The software side of the business has really learned from how to operate a full service. And actually, the operation side has learned how to innovate and design new processes. So, and we continue to be surprised. I was just in the Philippines last week with 300 team leaders. And these are all people who interface with our clients every day, and just the learnings that we can get from a company with that direct access to a client is pretty incredible, in knowing what we should be building and what we should be optimizing.
Yep. That touches on the next, I think, interesting thing about this model. You both have experience working at software companies at scale, at operating companies at scale, and those come with their own trade-offs. The software companies, you can build the product and you have to sell the product, but you then have relatively little control over how it's used, or increasing adoption, or dictating usage in a certain way. And at operating companies, maybe it's a slightly different problem. You have less of a incentive alignment, you have control, but maybe not full alignment and motivation. This is this interesting merging of those two, again, those trade-offs, or it's a jumbling of those trade-offs, the costs and benefits of each model. So what have you found to be the most challenging part of shifting from a pure operating or a pure software to this kind of merged model, and what's been surprising, and what's been harder than you thought it would be?
It's interesting.
Yeah. It's really just building on what I was mentioning before, really. I think the real opportunities, I mean, I guess we've all, there are many founders in the room, and a lot of people ask us is why and why now? And the why now is AI is iterating so quickly that there's an opportunity for us to insulate our clients from doing that. So, we set a goal as that if anything cool appears in a base LLM, then we can surface that to our clients really quickly. So an example of that is photographs. So now any one of our clients, who is live, can just basically take a photograph of something that maybe needs fixing or something like that, and basically we can use that underpinning diagnosis, and that becomes a feature or part of the extended service. And we always try and think about actually not just our clients, but our clients' clients, and what do they want? And it's like, actually, they just want to be able to contact the company 24/7 on whichever channel they approve, and if the AI craps out, then they can speak to somebody who actually knows more than the AI. And and that's what we're trying to evolve. So, but that's the exciting thing about learning, being close to the customer. There's what I call seismic shifts, which is what AI is actually doing within our space is really pulling down the cost per interaction. And we do that out the gate with our clients. Typically what they were spending, they'll get a 20% reduction immediately off their customer service bill because we know how to operate and run it. But then there's the use cases that come up. So we have one. So we built this voice AI, and it's really good. You know, and clients are really excited about it. They call it up, and it can solve most of their stuff. And we have humans in the loop that are constantly tuning it, and it's auto-tuned. And then what we discovered by analyzing what was going on was that we designed it to be initially break-fix, which is essentially something's wrong. I'll call this thing to figure it out. And we have one of our clients is Ratio, and I don't know if you guys know them, but they do these really cool lawn sprinklers with just one jet, so you don't have to install irrigation, so it maps out your garden and kind of will irrigate the whole thing precisely. And so this was people who were having problems with that system. They couldn't connect it to Wi-Fi, or they couldn't get it connected. And we started to see calls coming in, and people were actually using it to ask it to help them set it up. And we noticed this really different social dynamic occurring, which was when people normally feel quite conscious that they're speaking to a human and burning their time, but when they were talking to an AI, they actually didn't care how much time they took. So now, Ratio now have this guided setup where you call it, and the AI will call it up, and the AI will talk you right through the unboxing all the way through to the onboarding and stuff. So it's something we're rolling out to some of our vertical SaaS clients as well. So again, conclusion, the learnings are there's micro improvements, but then being very quick to market with big new use cases that are transformative as well.
Yeah. I think for me at Moxie, the operating model is actually much easier than anything I've managed in the past, and that is because of the unique way in which we capture revenue. And so we take a % of sales from each of the customers. We call it a performance fee. We're not successful unless they're successful, and there's really two kind of profound impacts on the business because of this. So one, it makes my job quite easy in terms of prioritization and resource allocation for the Moxie team. There's really no moment in time any of our employees are not working on something in direct support or service of our customers, right? The incentives are so aligned. And by direct service, I mean helping them protect existing revenue streams or helping them acquire new revenue streams, right? And so that makes it quite easy for us to prioritize work internally within the business. I think the second profound impact is it unlocks kind of this range of differentiated features or kind of value-driving assets that we will develop that we wouldn't otherwise be incentivized to do. So an example of that is we have an in-house ad agency in which we create the creative for the customers, we run the ads for them, and we deliver this service to them at no additional cost. Because if they win, we win in that model. And that is very differentiated from a traditional kind of software vendor within the space that they might use as an EMR or switch from to come on to Moxie, right? Another example is what we'll do within compliance or keeping their operations compliant, because they're not just paying us, a fixed fee bill at the end of the month. We have a vested interest in keeping their doors open if an auditor came. And so we will go above and beyond to make sure that there is kind of a host of features within the product itself that help them maintain compliant workflows. But if there is an auditor coming, we might even help them prepare for that, and provide checklists. And so that's what we mean when we say, well, there's really nothing that we won't do in service of them. And that is because of our kind of revenue capture model that I think is highly unique and makes it much easier, because of the aligned incentives to operate.
It's one thing I loved about meeting Kamal before is that for the other founders and CEOs in the room, I think I never thought that I would be thinking so much about how you embed in practice the things that you want your team to be focused on and doing in order to really curate your end product. And it's incredible how financial incentives or how we get paid is the number one thing that everybody thinks about in the organization. Even our customer service agents through team managers, people you wouldn't expect to do. So then we start to think about, okay, how do we use that as an advantage to make sure we stay pure to our mission and only deliver positive outcomes for clients? And there was one example where we had is that quite a lot of the time in customer service, you might get a DSAT. Not a huge amount of time, but somebody was not happy. So we had this discussion and say, well, is it really fair that we don't get paid if it was the product's fault, our end customer's product fault? You know, we tried our best. And then we suddenly came to the conclusion that we have so much information within the customer engagement, and we wanted that to be part of our service, that actually, by not agreeing not to be paid for that as well, it incentivized the team to actually figure out the things that needed to be fixed and communicate that back to the client as well. So those are really interesting moments of learning, you know, that we had as well.
That's right.
And now that brings up an interesting question around prioritization in traditional SaaS models. You have, you know, you build the product and you sell the product, and you can make the product better, make investments in the product, and you can become more efficient at go-to-market and renewals and all that. With this, you have multiple levers for growth, as you both described. So you can acquire more businesses, so kind of this inorganic growth lever. You can help those existing businesses grow faster, so improve their top line, or you can help them be more efficient, so improve their bottom line. You have all these open to you at once, and it's almost, you know, too many options in front of you. So how do you think about prioritizing at the operating company level or at the headquarters level where you spend your time and where you make investments?
That's a great question.
Yeah, I mean, from a product perspective, particularly thinking on service.
Just a resource, like when, as the CEO of this business, you say, okay, for the next quarter, next 2 quarters, we're gonna get better at M&A, and we're gonna go identify better targets, or we're gonna really focus on improving the efficiency of our operating companies in this area because we think there's a lot at the bottom line. We're not.
I mean, for us, we're at the stage where it has to be about quality of service, the quality of service that we're delivering. It's all about that. But what we're finding is, we had a laugh about this earlier, actually, because you think that you walk into, I'm sure you guys have had this, where you walk into a company and you say, here's a new service, it's only paid by outcome, it's 30% less than what you've got before, and it gives you everything you've ever wanted as far as AI channels and 24/7 staffing on back ends, like, you know, they're going to be queuing up. And then what you identify is obviously there are friction points for adoption, you know, that you have to overcome. And we're finding the best way to overcome that is just by really leaning in and delivering amazing service. So if somebody's live on chat and email and AI, then we will push really hard to try and get them live on voice as well, because we know it'll improve their service overall. So that's one of the things we really focus on, is how do we take our clients to the next level, you know, from that. From an M&A perspective, where do I start? It's very much around acquiring a business that fits very tightly within our ICP, and have the other founders of that organization are on board with the mission. So we are not acquire for asset, we're acquire for growth. And you know, so getting that right founder combination, and then combining that with the opportunistic founder who wants to sell is the unique thing that we try and get.
Yeah.
My real answer to that question is we want to build it all at the same time. But what we've done is kind of go through and we build for our existing customer base, right? We prioritize their needs and their pain points, and we'll ask all of them, particularly the ones who have been with us the longest, you know, why did they join? What are they experiencing today in terms of friction that they weren't last year? You know, and we will map that out and say, okay, there's an equal distribution of 3 things here. And so we know we need to ultimately solve all 3 of these.
Yeah.
What are we seeing in the go-to-market engine as well? Yeah. Is there a consistent series of pain points across kind of new business coming in that our existing customers are also facing? And that will be truly the prioritization map of how we build. Yeah. And it's predicated, once again, on if we can delight kind of the existing and long-standing customer base, they will bring us new customers. We're creating raving fans by solving their needs and supporting them first, and everyone else will come because of that.
Makes sense. You might have just answered this question in part, but where do you think about where your ambition or product scope or what you want to control and own stops? You know, you talked about the audits, you talked about this in-house marketing agency. Matt, you talked about, hey, if the product doesn't work, you know, that's almost our problem to figure out and to resolve. We want to own the outcome of that, even if it isn't directly our fault, and that kind of gets into this overlap between you and your customer. So where do you draw the line or think about redrawing the line about where your responsibility stops and starts and where your customers or partners stop and start?
We don't. Like, our ultimate ambition is that our customers pay rent, they pay their landlord, they pay Meta for Meta ads, and every single other line item on their P&L or expense that they may have is serviced by us, right? And that in turn frees them up because they're able to change 5, 6, 7 different vendors for one. And they have a single point of contact who's accountable and responsible for them, right, to them. And so that is our ultimate ambition, and we would never kind of limit that because it would stop us from seeing great opportunities to solve future problems, right? Like as we are seeing kind of med spas now open multiple locations and start to hire people, you know, they are coming to us and saying, hey, we can't attract really high quality talent and we can't keep them. And so the next kind of work and service and discovery right now is how do we do that for them, right? How do we have a fractional CHRO program in-house so we can solve this, and how do we work with you to develop that and solve the most pertinent issues within that?
Yeah, it's very cool.
Yeah, I mean, I think it's a similar thing if we approach it as how much can we actually solve without breaking. I mean, what I don't want to do is build a whole new product line and team right now. I want to keep focused on this, but I think we've been surprised about how the core product, and when I include product, it means people actually, so we have a huge amount of flexibility because if the software can't do it right now, we probably have people who can do that, and so we provide this, you know, packaged service. But, you know, it's but we're continuously surprised. We thought we were just inbound customer care for voice, for example. And then somebody said, actually, one of our clients said, well, we want to be able to do proactive follow-ups. And here are the numbers, and can the AI do this? And we thought, well, actually, we don't. And then we realized that we just connect to the telephony system, and it hands over to our AI, and we just train the AI to say, you now made this call, rather than receiving it. And we innovate in the customer experience in that area. So we keep finding these areas where we thought we were maybe going to be boxed in, but AI and LLMs are just incredible for product innovation. You know, for those of us that have been around and working on, you know, on structured workflows and rigid UXs in the past, the speed at which you can innovate and bring new services to market is incredible. I think we're all relearning that.
Yeah. I think you both started your respective businesses with this kind of roll-up, or like we are going to acquire or grow with these businesses. That's been part of the vision from day one. But what advice would you give to founders in this room who are maybe operating a standalone vertical software business today, and they're maybe in a roundabout way seeing part of what you're describing, which is, hey, our ambition for the problems that we can solve for our customers are pretty unbounded. They are giving us more and more of their problems, and we have the right to go solve more and more things for them and be more aligned with them to earn more of the economics. Knowing that there's a range of options here, whether it's full acquisition or more, this kind of franchise co-incubation model, what advice would you give to folks who are starting with an existing vertical SaaS product?
That's interesting.
Can I take it? I can start with you.
Yeah, go ahead.
I think there's two ways to think about M&A, at least from this perspective. And our first acquisition was absolutely the first augmentation and build out a product and be able to offer the complete service. And so it was definitely the first use case. But the second thing was distribution, and the fact that I was able to acquire 200 customers, part of that, who were in our sweet spot, who we wanted to evolve to, and they were already spending money with us, and we already had a client relationship. And so I would say that's the dream, right? So you've got some kind of product augmentation, and then you've got acceleration of distribution. Actually, as it turns out, the future acquisitions we do will be less about products, and they're nearly all about distribution and scale. And when we think about distribution, it actually becomes really interesting for us, Sam, is that at the moment we're really just focused on this core market, but can we use this to accelerate international development, or can we use this to get into new vertical markets or opportunities as well? So I don't know everybody's businesses, but my guess is that there are service partners that are aligned to that could potentially give distribution from that. There's an interesting financial calculation on it as well that I won't get into now, but I can talk to people about it later.
Our perspective is that the model should be dictated by the needs of the customer, and what is the makeup and the profile of that customer. So if you think about kind of med spas in particular, there's a long tail of single location med spas, oftentimes run out of salon suites that are too small to transact. And so you couldn't convince me to buy one of these locations because you'd be buying a job and not a bankable asset. But that model actually works quite well if you look at something like a franchise model, right? Where you can take a small performance fee and you can support the operations of that, and they get all of the benefits of scale of being a participant in what a large, aesthetic chain or a roll-up. You get the procurement, you get all of the software, right? And so they're able to then compete more effectively, and it becomes a disadvantage to those not on a platform like that, right? In a market of that. And so really, the model should be dictated around kind of what is the market dynamic and what is the customer need within that.
Yeah, absolutely. Start with the customer. Start and end with the customer.
That's right.
Yeah. Before we turn it over to questions or open it up for questions, any other things you guys wanted to cover or anything you thought would be interesting to bring up?
I don't know, it feels like we've covered a lot. So, yes. I mean, there is the financial aspect that we found, I didn't touch on, which is the roll-up side of things, is that we found that the way the business is valued is different from a pure services business to a combined service offering business. The combined service offerings business is valued higher, so there's an interesting investment arbitrage, I guess you'd call it, from that, which is compelling to investors. So I guess everybody wins. As me as an operator, I get a distribution channel. The end customers get new products, and the investors get an increment on multiple. So.
Cool. So open up for questions. Oh, go ahead. Yep.
Question for, is it Kamal?
Yeah.
Kamal, yeah. So can you talk a bit about how you thought through the business model side of your business? My understanding is you do some kind of percentage of revenue.
That's right.
Did you sort of think through more traditional kind of like SaaS type model where you're how did you sort of decide between charging for software and maybe services versus kind of bundling into a fixed percentage of revenue type of thing, and just sort of how you think about that now on an ongoing basis?
Yeah, I think the inception of the business was business in a box, right? And so you're making an outsized financial investment that is inherently risky. A quarter of those entrepreneurs are going to fail. And so we, over time, have gotten better at identifying, who might be successful at this and who not, and kind of qualifying out and getting stricter and stricter. But we are making a large investment in resources and capital in their success. And so the thinking is, on the back end of that, there's an outsized take rate, right? That warrants that. And there's customer loyalty through that, right? We have customers we've grown from 0 to 3 million in revenue, right? And they kind of love us and attribute a dramatic change in their personal life and livelihood to Moxie. And so with that kind of comes this alignment. And it really is, it's the take rate and it's the alignment of incentives, right? It allows us to pursue just a wider variety of services in support of them that wouldn't make sense otherwise. And what you end up with is this operating ecosystem that's almost impossible to leave once you're in it, because we are so embedded in all of the processes. And then we have so many different unique and differentiated offerings. It allows a longer runway of cool things that we can do that no one else can do, right? The dynamic benchmarking that we can do across taking all of your different services and all of the performance of your business and support of you. And so it's a long-term play that we kind of stand behind and has influenced a lot of our decision making.
Sorry if I misheard you, but you had a 10-person company that then shortly thereafter bought a 4,000-person company?
Yeah.
Yeah, how? How?
Like, I'm actually only 21. Last year has been kind of rough. Yeah, it was, I was fortunate in the last, and this is why we fit together well as founders. In my last 4 years at Zendesk, I was responsible for M&A integration. So I knew a little bit, about that. We had capital in order to do it, and the premise of our capital was to actually do this kind of roll-up. So I think we were told, and I'll keep this until somebody proves me wrong. It was the largest acquisition ever by a 10-person company. We'll hold that as upon our war of laurels. But, ultimately, it really helped us, because I acquired a whole bunch of infrastructure. I had an IT manager, I had an accounting system, I had accountants, I had a CFO, and this business was also really profitable. And so actually then it started to generate cash for us to invest in the other parts of the business. Lots of upside, but we put a lot of care and attention. I said I was in the Philippines last week. We had teams in Honduras. We have agents in the US. A lot of taking care of the people. You say, sorry, but if you imagine these are people working in customer service, they read the news every day about how AI is going to kill their job, and then they get acquired by an AI company. We had to do quite a lot of work to reassure them, and now we're adding stuff.
No,
I want to talk, or maybe I'll find you later, but I mean, did you just underwrite the business model based on, hey, like an uplift in sales or a reduction in cost based on our AI, and we're going to go raise hundreds of millions of dollars to go acquire a business, and like, is the cap table, I guess I'm confused at how that works.
Yeah, I mean, the structure, obviously we're careful about the structure of the deal and the amount of cash that we invested, so the idea is a service business is can we take that existing business and can we make it something more, make it something better? And so if you take something that's a pure labor-based business and we then change it to an outcome-based business with amazing AI, and we can get customers into production faster than any other company, or if they were doing it DIY, that's a value creation exercise. So it actually gave us wiggle room to then even discount lower from what those customers were paying. And what happens is basically we share the upside of the automation that we can do and that they do as well. So over time, not at first, our margins go through the floor initially, but then they gradually climb. And so we end up with a higher margin-based business, and obviously that's something that people can invest in from there.
Awesome, thank you.
Probably have time for one more quick question before we get yanked off stage. Or not, we can end early. My least favorite thing is when you end a call early and people, I'll give you 5 minutes back. Like, but I'll give you 1 minute and 40 seconds back. We'll end early. Thank you, everybody, for the time. Thank you to the panelists.
Thank you.